Imagine having billions of dollars sitting in cash while the stock market is moving all around you. Prices are rising, investors are getting excited, new opportunities appear every morning. And yet, Warren Buffett sometimes does something that feels almost unnatural to most investors. He waits. Not because he cannot find companies to buy, not because he is afraid of the market, but because Buffett understands something most investors learn only after losing money. Having money available to invest does not mean you have to invest it. Think about that. Most people see cash as something that needs to be put to work immediately. When the market rises, they feel pressure to participate. When everyone is talking about the next great stock, sitting on the sidelines can feel like falling behind. Buffett sees it differently. For him, investing is not a game of constantly finding something to do. It is a game of waiting until the odds are overwhelmingly in your favor. That difference is enormous. Imagine you are offered 100 businesses to buy. 99 look interesting, but their prices leave little room for error. One is an exceptional business run by capable people with understandable economics, strong competitive advantages, and a price that gives you a meaningful margin of safety. Buffett's advantage isn't necessarily that he can discover all 100. It is that he can confidently say no to the 99. And saying no is psychologically difficult. Humans hate missed opportunities. We fear watching someone else make money while we sit still. This creates one of the most dangerous behaviors in investing, forcing a decision simply because we have capital available. But Buffett's philosophy turns that instinct upside down. Sometimes the best investment decision is to do absolutely nothing. This is why his enormous cash reserves can be so powerful. Cash gives him optionality. When attractive assets become expensive, he can wait. When fear eventually creates extraordinary bargains, he has the resources and emotional freedom to act. And notice the sequence. He doesn't wait because he knows exactly when the market will crash. He waits because he doesn't need to predict the future perfectly. He needs to recognize when the relationship between price, quality, risk, and potential return becomes unusually attractive. That is a completely different mindset. For a beginner investor, this lesson is incredibly important. You do not need to own 10 stocks. You do not need to buy something every week. You do not need to react to every headline. And you certainly don't need to prove that you are an investor by constantly investing. Your real job is to protect your capital, understand what you own, and wait patiently for opportunities that genuinely fit your criteria. But there is an even deeper lesson here. Buffett's patience isn't simply a financial skill. It is a psychological advantage. When greed is screaming, he can remain rational. When fear is dominating the market, he can remain prepared. And when there is nothing attractive to buy, he can tolerate the discomfort of doing nothing. That may be one of the hardest investment skills to develop, because the market rewards activity emotionally, but it does not necessarily reward activity financially. So the next time you feel pressure to buy an investment because everyone else seems to be making money, ask yourself one question. Am I investing because the opportunity is truly compelling or because I am uncomfortable waiting? That question can save you from a lot of unnecessary decisions. Because Warren Buffett's greatest investing secret may not be knowing what to buy. It may be having the discipline to wait until saying yes becomes far more attractive than saying no. In investing, patience isn't the absence of action. Sometimes, patience is the action.